Hey, what's good, traders? Welcome back to the channel. Today we're going to do something a little bit different, and I'm going to show you guys the trading strategy that I use on a day-to-day basis. It's one of them, but it's the primary one that I use. It's super simple, super easy to follow. You should be able to flip through charts and be able to notice exactly whether or not a trade is in play or pretty close to being in play. But first, if you are new to the channel, my name is Tom Vero, founder of the Consultant.trade, and this is a place where we hold traders accountable for their trading in order to have profitable futures. If that's something that you are interested in learning more about, check out the website down here, the Consultant.trade. There's more information there. The website's constantly being updated, and you may also find that we have an app. It's called the Traders Accountability Small Group, Task G. I mention it quite a bit on my Twitter, if you follow me there. But in Task G, it's a place where we bring traders together into small groups. Okay, so small groups, it's where traders can actually interact with their group, and you don't have to fight to talk over 2, 3, 4, 500 people on some Discord servers. It's a place where you're assigned a group. You get to know the traders, so you're not dealing with a different opinion every single day of the market. You get to learn and be mentored by other traders, and in hopes that you guys can come together and hold each other accountable. There's plenty of information there. If you are interested in the app is still, at this very moment, is still under development. It does work. It does what it needs to. But if you're interested, hit me up on Twitter and shoot me a DM. I'll give you guys a discount for the moment. And until then, let's get into some charts. All right, so we are now on our chart. This is the WorldCoin crypto chart here on Binance's perpetual chart. It really doesn't matter if it's futures or crypto. However, I will mention this trading strategy should work across multiple assets. So whether you're trading futures, crypto, or even stocks. However, I will say this will not work on Forex for the simple fact that you need VWAP and you need volume. You won't get VWAP without volume, so volume here is the key player. Forex doesn't actually most brokers do not show volume for Forex or any of their Forex assets. So be cautious. If you do see volume, let it be known that is your broker's volume, and that does not reflect the overall volume of the market. Let's move on here. So, two most important indicators here is volume and VWAP. Nothing special. You should already have this. Pretty much every charting software should be able to do this. I will say that on the volume, you need this piece right here. This is the moving average. I'm going to show you my settings here. This is default on TradingView, so I haven't changed any of this. The moving average length is 20. And then of course you see that there's nothing really here, nothing special. VWAP, let's see, VWAP, if you're on TradingView, you can just take a look at these. I turn the bands off. I don't like using the bands. I don't really even know anyone who uses the deviation bands, but hey, whatever works. In comparative session sources, I'll have a close 3. Yeah, and that's about it. Visibility, sure. All right, let's get on. All right, we are looking for two things to start off with. One is above average volume. Okay, this play does not work at all without above average volume. So when you walk into a chart, it's one of the things you want to see. You want to see volume above your moving average here, So, you know, you're going to be, it's exactly where your eyes are going to go. You're going to go down here, you're going to be, oh, hey, above average volume, above average volume. All right. Now, number 2 is going to be one of 2 things. You're going to look for hammers, you're going to look for shooting stars. Okay. Now, I want to make something very clear that you are going to, the reason why you're going to be looking for them is because this is the price action part that we're going to be looking for in our strategy. But we're not going to be too particular on the placement of said doji or said hammer or shooting star. The key here is that we follow the trend and we follow the volume. Okay, super simple. I'm going to go through. I've already got a trade here and a couple of trades here. I got 3 that I'm going to walk through with you guys, and a couple of other 2 potentials that would have resulted in losses. So, by definition, the definition of a shooting star and a hammer that I use, I actually stole this from the trading channel. You can find them on YouTube. Just type in the trading channel. It's been around for quite literally everywhere. But I thought this was really intriguing when I saw his explanation of how he determines what the rule for his shooting stars and his hammers. Now, I'm gonna scroll in here super far, expand this out. So I want you to see this right here. So this is the Fibonacci retracement, and basically for a hammer, you want to take your Fibonacci tool, click the low, and all the way up to the high. And if the body of the candle is above the 3/8, then it satisfies. It works. It's considered a hammer. And it would actually be the opposite is true as well. Let me see if I can find one. Yes. So we're going to use one of the examples here. I'm going to move this over. This right here. So basically, what you're going to do is you're going to do the same thing. I'm just going to expand this out, but you can see that I'm going from the high to the low. Here's my 3/8, and the body of the candle is below the 3/8. All right, so that would be considered a good example of a shooting star. Okay, we're going to come back to this one. Keep an eye on that candle. We're going to come back to it here in a bit. All right, let's go back over here. All right, so we're trucking along here, and we have high volume. We got high volume on a hammer, or something that we've classified as a hammer. And one of the things that we're going to be looking for is where our market structure is to the left. Okay, because none of this over here exists. We're looking here, we're looking here, and here. Okay, this is everything to the left. We've noticed, since this has already happened prior to this candle, we know that we are making higher lows. Okay, so this is going to be kind of our baseline. Oh look, higher low, higher low, higher low, and then we kind of have a pullback again here with a shooting star and above average volume. Again, look, there's the above average volume, and our entry is on the next candle. Okay, we don't want to get in early because this could just flop around like it normally does at the last second. We want to wait for the close and get in here on the next candle. Okay, stop loss goes below our previous swing low of our structure. Okay, now for take profit, this is very much a controversial topic, in my opinion, because everyone has a certain level of risk tolerance. Some people say, oh, you should be you know, at least a minimum of two times risk. Okay, that may work on higher time frames. Okay, don't get me wrong, that may work in on higher time frames, but you got to remember we're on the 3-minute time frame, and a lot of times you're not going to have a whole lot of trades throughout the day. You know, if you're trading within a certain session, you're not always going to have, you know, you're not going to get it all the time. Okay, so what I do is I do 1.5. I do 1.5 risk to reward. So it really works out for me. I think it works out. I think it fits my particular appetite for the 3-minute time frame. If I wanted to go a little bit higher, honestly, I'd probably have to go to the 5 and 15 minutes, or even maybe even the 30. If I wanted to go 2 or 3 times risk, but that's neither here nor there. I don't trade those higher time frames because I want to get in, I want to get out, I want to be done with the trade. I want my anxiety of all of that to be done. So this is the basic trade that I would normally do. I took this one yesterday. It was really good. Props to you if you're part of the 4 a.m. club. So yeah, but 1.5 risk to reward. This one worked out very well. It was lucky to get filled before it turned back a little bit. So market's moving along. We do have above average volume here, but it does not fit our criteria. So we're moving along here, above average volume. So right here is another trade that I took. This was about an hour later. So I think this one fit just perfectly, or it was pretty close. But I went ahead and I jumped in this trade, and you can see that it did pull back. It didn't just go up like this one. It did pull back quite a bit, probably about 75 to pretty close to 80% of the trade, but then it did go up. Now, you could probably tell, looking here, high volume, or above average volume, that this could have been a second entry or an addition to, adding on to the trade. I don't necessarily add on to the trades all the time. I did not do that for this one, so I would just make it clear I did not. But I did get into this trade early here, based off of this one. If you missed this would have been technically a second opportunity to get in this trade. Really nice. About 25 minutes later, I think it's about 20 minutes later. Now, this one rode out for quite a while. What is this one? About 2 hours. About 2 hours is what I held on to this trade. Actually, I think I forgot about this trade because it was going so long, and I got into doing other things. So, to my surprise, when I came back, we ended up hitting take profit. Now, there's a couple of things. Had I actually been sitting in my seat during this time, there's a couple of things I want to note. One, the reason why we have VWAP here is because VWAP is the fair value. It's supposed to represent the fair value price of the given asset based on current price, and volume. So, based on that, this could be used as a level of support support or resistance during this session. Now, I'll be completely honest, had I seen this candle at the time, especially this candle, I more than likely would have exited the trade, because this would have been to me a sign of resistance, and I would have exited the trade. And I would have been like, oh yeah, sure, cool, I was right, and then it just pops up. So this side of the trade was, in my opinion, was very lucky that I was able to get that. But I want to note the other side of this. Now, had you gotten to this chart and not had this trade, I will say that there are two other trades here. One would have been this. Okay, it would have been this right here. This one does meet our criteria, above average volume, shooting star. Okay, the body is body of this candle. The lower part is below the 3/8, and we have good risk tolerance here. So I'm going to show you guys where I would have done this. This would have been, I would have either put it here or just passed. To be honest, I think I would have put it just past, and then, you know, look at where our, yeah, that would have been pretty good. I think that would have been a pretty decent excuse to get into this trade. It meets all of our criteria. You are below VWAP, so if you are trying to follow that trend of you know, hey, we're below VWAP, we should be looking for shorts, or hey, we're above VWAP, we should be looking for longs. I think that's pretty acceptable. I think that's really acceptable. I think it's really good. However, this trade would have turned out not to be good. So let's get rid of this one. Your second potential entry would have been exactly this. Well, I think a lot of people would have looked at this as rejection. I don't think they would have been, you know, called out for it, for being, oh, what are you doing? It's you know, it's clearly it's going up. Yes, but again, VWAP, looking at this from a support and resistance point of view on the session, you know, this would have been a pretty risky trade. You don't really have much of, I mean, you don't really have anything for a market structure to the left, except for this, which is, yeah, it's, I think this is still part of the session, but I don't think it really would have been a great risk to reward. And that's pretty big. Oh yeah, that's really big. So you would be expecting something like that on a 3-minute chart. Yeah, no, I don't think so. But I'm not saying I wouldn't have taken that. I'm not gonna say I would have not taken this at all. So I think this one here would have been a better risk play than anything. This one, looking back, you don't really have very much market structure to go off of, and it would have made your profit range just really high. And I don't like that. I like the really short ones, like the ones that I can get in short and sweet, and they really work for me. So, but these two, I don't think anyone would have, you know, said anything against you had you taken these two trades. So just depends on your trading strategy. You need to look at price action and whatnot. But this is the trade that I took. Let's see. There is, so this is my other trade. Nailed this one. Nailed this one. This one was pretty good. I really like this one. We did drop below. And again, kind of going based off of the overall trend, looking to the left, we do have a series of progressive higher lows throughout. Okay, and then it just kind of tapers off. But the market kind of goes in waves. It doesn't just kind of keep going up and goes down, it goes up. It goes in waves. All right. Really tight top here, which to me indicates that even though we did have high sell volume, the buyers were able to pull the price back up. Okay. So entered on the next candle. Stop loss was right below the market structure here. I was actually looking at this one, not this one, but since it does kind of match the lows on this, I did choose this one. Obviously, had I chose something a little bit deeper, my profits would have been higher on this. But that's should have, could have, would have. In this case, I did. Again, I only do about 1.5 risk reward. So here you can obviously see I left quite a bit on the table. Okay, I'm not one of these traders that said, "Oh, look, I took. Look at this trade." No, I'm being realistic here. I'm being realistic here. This is the trade that I took, and yeah, I left easily 2.5 times on the table, but really satisfied with it. And this is actually where I ended my trading session for the day. I only got 3 trades in, but I got 3 trades in within about 5.5 hours. Pretty sweet. And yeah, I mean there's plenty more here. There's really not one. This, and then yeah, I think a lot of people would have jumped in here for the bounce, but in my opinion, based on our rules, even volume didn't even perk my interest. So yeah, I'm just kind of scanning through. Honestly, I haven't looked at this today, so yeah, really nothing's kind of perking my interest. So, but nonetheless, this is rolled coin. This should work on other assets as well. Again, 3 minute. I know some people are going to ask, well, what about support and resistance from higher time frames? Let me tell you something about that real fast. I'm going to go back and switch back to my beautiful face here. Let me tell you something about using support and resistance from other time frames. Now, that doesn't necessarily work for this trading strategy because we're keeping it simple by really only looking at 3 things. So volume, VWAP, and the market structure from previous, so that's to help dictate our stop loss. So it's going to be based on price action. The reason why I don't look at the higher time frames is because the higher time frames will prolong my my trading. Okay, I'm more worried about this particular session and not something, a session that has to do with swing trading. All right, I know there are a lot of traders that use even like the 1 minute and the 3 minute time frames, and they still kind of use an anchor chart to kind of dictate which direction they're going. I don't necessarily do that. It's never really worked out for me unless I'm swing trading or I'm doing long-term position trading. Those are the only times that's really worked out for me, and normally that only works out on the 1 hour and the 4 hour time frame for me. Which, obviously, if your appetite is like mine, with only 1 to 1.5 times risk, it's really not going to work out for you, especially if you're doing something like this. Now, you can certainly apply something like this across other time frames, but you're going to be looking at holding the trade a lot longer, and that's not what I want to do. So that's kind of how I roll. 3 minute time frame, that's my focus. I don't want to be flipping back and forth between 5 different time frames in every single chart. I want to be able to go through each chart and look at it and determine whether or not I like what's going on, and I'm going to focus on that. So that's kind of where I'm at with my trading strategy. If you guys have any questions, let me know. This is kind of a little bit of a longer video, but I'm sure as I get used to doing these, they'll be a little bit shorter. But for the most part, I gave you guys 3 trades that I had from the previous day, yesterday, and I'm gonna kind of keep doing this, so the videos will get a little bit shorter. But if you guys have any questions, let me know down in the comment section. But if you don't want to do that, hit me up on Twitter, shoot me an email at support@theconsultant.trade. Almost forgot the email. But other than that, that's all I got for you guys today. So I'm going to leave it there. Stay safe, stay healthy, stay decentralized. I'll see you guys in the next one. Later.